Inflation is everywhere, just don't ask the Fed. According to them, it's 1.5%. I guess if you have your head in the sand, everything is sort of muted anyway. Look at how fantastic the performance of the stock market and the housing markets have been during this spectacular contraction, and what has been the response? Print until confetti, print until worthlessness. This environment has created a major speculative boom beyond which we have ever seen, and the truth is that nobody knows how this ends. You came here for the truth, so let me unveil that for you. Something that I've talked about previously, but I want to mention it again, is that when you bring interest rates down to rock bottom, you basically readjust the mentality of the investor. Where you previously would have more stability, you have exaggeration, you have volatility in certain ways, not the VIX index, of course, but you get this massive up, massive down, and all of the unwinding that happens is always occurring in such a rapid and disorganized fashion. So we are going to actually talk about some of that today with Archegos. I want to follow up on this very important issue and talk about what Nouriel Roubini had to say. I don't agree with what Nouriel Roubini says. I read one of his books, but I like to look at that. Just because I don't personally agree with all the statements a person makes doesn't mean that I shouldn't take in that information. I want to be objective. I want to learn from multiple sources. I want to get the information from all different angles. I've got a lot of other data here today, and I don't want to waste any more time. Let's go. Let's start by taking a look at this. I think this is a fundamental issue that nobody wants to talk about. It's sort of this, problem that the US eventually has to face. And because they have the monopoly currently, because they're the reserve currency, they have extra levels of power, unlike anything that we've seen previously. And you know that this is part of the reason why they're able to do certain things no other country can do. Among those pairing US dollar holdings in recent months, central banks. The dollar share of global reserves has decreased to its lowest level since 1995. That's according to the IMF. The currency now stands at 59% of global reserves as of the end of December 2020. That's a 1.5 percentage point decline over the quarter. So we don't know, there's always fluctuations, but hey, look at the trend. It is very clear right here that over the last 2 decades, there has been a trend of decline. And if we encounter some other issue along the way, who knows? It might change that pattern, but certainly this has been going on for a few decades. Although the dollar has edged higher year to date, some on Wall Street expect factors to include trade deficits and China's expansion to weigh on the currency this year. They go on to talk about this, but I just wanted to show you because there has been this overall euphoria around the currency status of the United States. But if you actually look at it, it's funny because yes, we have things priced in US dollar, but if you understand that certain countries today are not exchanging goods and not, dealing with the US dollar in some cases, it's not just these small one-off situations. China has, I believe, is dozens of countries that they are now engaged in currency swaps with, and it's pretty much every country now, if you look at it, all the major countries, I should say, and they are trying to do away with the US dollar. I want to talk more about that in a second as well, but I just want people to be aware of what's actually happening. Yes, the pricing for, your major commodities and so on are US dollar based, but when you see the actual total reserves, know that the central banks aren't necessarily keeping just one reserve currency, they have a basket. And that brings me to this. 1,000 years ago, when money meant coins, China invented paper currency. Now the Chinese government is minting cash digitally in a reimagination of money that could shake a pillar of American power. Now, I don't necessarily agree with that because what we are seeing here is just all central banks going in this direction anyway. And they mentioned something here. It might seem money is already virtual, as credit cards and payment apps such as Apple Pay in the US and WeChat in China eliminate the need for bills and coins, but those are just ways to move money electronically. China is turning legal tender itself into computer code. They talk about crypto and Bitcoin and so on, but I just found it to be interesting. And of course, it really does need to be mentioned at this point. If you look at what all the central banks are doing, I believe that ultimately they want more control. Every country wants more control over not just the currency, not just the financial system, but of the citizens themselves. There's another article essentially covering the same information on CNBC here, and they're suggesting that China is further ahead in the progress. To be honest, I don't think that this is the kind of thing that it's something to do with progress. Just because they created a digital currency, the US could do it tomorrow. I think that the implementation of that is probably going ahead right now, that we just don't know. We always find out about it afterwards. But regardless, when we see what's happening here, I think this is more just a small change in the system right now. I don't think anybody's going to realize a difference, because all of that nefarious activity is going on behind the scenes, which the public won't be aware of regardless. Roubini warns U.S. yields above 2% will bite amid excess risk. Economist joins investors like Scott Minerd, as we covered in the previous video related to Guggenheim, warning of pain. Fund flows growth among the drivers of yields. A fresh spike in Treasury yields will rattle markets and could send more family offices and hedge funds down a similar path to Bill Huang's Archegos Capital Management. That's according to Nouriel Roubini. And, they talk about the previous cycles and so on, but here's a quote. "We are seeing widespread frothiness, bubbles, risk-taking, and leverage. Lots of players have taken too much leverage and too much risk, and some of them are going to blow up." And that, to me, is really key. I mean, you could read more what he said here. You can watch the interview if you want, but that's the basic summary here. We are seeing that all these companies out there are using this very low interest rate environment. This is what happened from 2.5% essentially down to rock bottom. And now when you have these interest rates at rock bottom, what does that do? Well, suddenly people have fewer and fewer options for where to put their money. Not just, retail investors. I'm talking about actual companies that actually have the ability to move markets. You look at this right here and realize that this has created a psychological shift in the way that these companies do business, and there is all of that nasty leverage that's taken place. I'm not talking about, you put a 20% down on your mortgage and now you're ready to go to pay those bills for the next 20, 25, 30 years. That's not what we're discussing here. We are looking at something much, much worse, and you just got to look into it a little further. And I know that if you're watching this video, that you know exactly what I'm talking about. I thought this was quite interesting. Morgan Stanley dumped $5 billion in Archegos stock the night before the fire sale. So how did they get that sort of advanced warning that the others would do it? I mean, was there something happening there? I'm not 100% sure, but essentially what we're seeing here is that some companies got burned worse than others. Credit Suisse, not just on Archegos, but also with Greensill. And as a result, a few of the executives got the boot. But regardless, wanted to bring this to you as I'm following it closely, not just because it affects Archegos, but as Nouriel Roubini, as Scott Minerd from Guggenheim has said, we can expect more of these to occur. But you don't have to worry about any problem, of course, because the US economy is growing at its fastest pace since 1984. That was the expectation that they suggested after this collapse in the GDP, that it's going to roar back, it's going to be better than ever. And why? What's happening here? Well, of course, you have the stimulus, you have the quantitative easing, and you don't have to worry about the problem that all of this causes, because there is no inflation to worry about. So therefore, this is all fantastic. This is something that I personally didn't even think about, because in this wacky, chaotic environment, these type of things happen very, on a very rare occasion, to see houses going for $600,000 over the asking price, going for double the asking price. I mean, it's madness. But here we can see something that was initially brought to me by a real estate agent, a friend of mine who was actually on my Clubhouse, and we were talking about this, and he brought this to my attention, and now I'm seeing the articles written about it. Look at this. Rapid increase in home prices puts buyers in a bind when appraisals don't match the sale price. Home prices are running up so fast in some parts of Canada, the valuations set by appraisers are not keeping pace, putting some buyers and mortgage lenders in a bind. So just quickly to talk about this, essentially, people are going way over the asking price. So let's say the asking price is $400K, and then the actual buyer says, okay, I'm going to offer $630K, which was the example that he used with me. And he said, okay, the house sold for $630K. Now that's excess. Actually, it was $350, the one that was listed. But anyway, you're seeing these homes that were going priced over $200K, $300K, $400K, depending on where it is. However, the appraiser goes in and says, your home isn't worth $630K. Your home is only worth $400K. That is basically causing a problem, because now they have to come up with the difference, and people just generally don't have $200,000 in cash sitting around. Then what do? In many cases, some cases, if they can't come up with that money, they're going to lose the deposit. So this is an issue that shows you that we are in such a euphoric stage in the real estate market. And as I said in the previous video, or maybe the one before, it's not just the big cities like Toronto. This is starting to happen in the smaller cities as well. So watch out. Quick one right here. Move over Elon Musk and Tim Cook. There's a new name breaking into the list of the highest paid chief executives. Chad Richardson, the founder and CEO of payroll processor Paycom Software. So they're just showing you here a breakdown of how much money these individuals are making. You can see Elon Musk's, it depends on their compensation package, of course. A lot of these CEOs, a lot of the executives, it's not just a salary. In fact, many of them have, I don't want to say mediocre salaries, but the actual total amount of compensation, much more of that comes from the performance of the stock. It comes from, options that they exercise, and you see this in just a few cases here. But regardless, Chad Richardson, this individual, Richardson, he basically, is moving up the list regardless. And I just find it interesting to see how these stocks, they use their buybacks, it pushes up the price of their stock. They're compensated for it. And so who benefits the most from share buybacks? It's the insiders. So you can look at the insiders. I've done videos about it. If you go to my e-course on the playlist on my YouTube channel, you will see the video about how to find out which insiders are doing what. It's all public information. I have a video breaking that down. So if you definitely want to take a look, I would highly recommend it. But that's the point, is that the insiders benefit more than the average shareholder. I got a lot here I need to cover. I'm just going to go through quickly. The premium on physical gold, and it's just mind-boggling to see this, and to suggest that there isn't demand is ridiculous. There's so much demand for the physical metals, and this is always the case like this. It's not just, oh, well, there's these shortages and this and that. Come on. We are seeing the demand there. It is very clear, but the paper markets help to push down the price. They want to keep the physical markets here down. And of course, this is the most heavily manipulated market. There is no doubt about that. The documentation is there. It is very clear. Michigan University becomes the first to offer cannabis chemistry scholarship. So I think that this industry is, of course, going to continue to grow. It's going to continue to get bigger. Sure, there's going to be certain names that fall off or get bought up. There's a lot to this, and I think that more and more there's going to be interest in this from investors. There was that big surge a few years ago, but certainly, there's definitely more money flowing in. I found this other one to be interesting as well. I wanted to make sure I included it. Has the NFT bubble popped already? Market data suggests new deals might be DOA. Now, I find that something of note because there's such demand for NFTs. A lot of people don't quite realize what they are, but it's all about that euphoria to get on in. Some people swear by them and so on. But of course, exactly the same as we have seen with the SPACs, there's a lot of money flowing in, but perhaps it's not all unicorns and rainbows. So we have this one here. Carnival Cruise Line notifies guests of cruise cancellations. So apparently this is going to continue on. This business obviously going to take another hit. But then you see this information that Carnival and Royal Caribbean both gained more than 1%. The market doesn't care about this stuff. It's only how much money are they printing. And that's my whole point. It's that the stimulus, the low interest rates, it creates distortions, and that simply doesn't end well. But for now, it's all party on. That's all for this video. If you found that informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn about e-commerce, you can do so for free at the AmazonGPS.com. If you want to learn about the financial system, you could do that in my 2 books. Check out the link in the description. And have you seen this video yet? If not, you definitely want to check it out. Click it and I'll see you there.